Hello and welcome to China Shortcuts,
the European Chamber's weekly catch-up on China's business landscape.
This episode was recorded on 12th November 2025.
China's export dipped in October after a surge in the previous months, as a slew of export control measures announced by China's Ministry of Commerce at the beginning of October increased uncertainty among business and trade tensions intensified.
Data released on 7th November by China's customs authorities showed that the country's total value of exports fell 1.1% compared to a year ago. This marked the first time that exports contracted since March 2024. In addition to the high base last October, another potential factor impacting trade was the 9th October announcement by China's Ministry of Commerce about tightened export controls, with extraterritorial provisions which were met by a threat from the United States of 100% tariffs on Chinese imports. While the latest batch of export control measures have since been delayed for a year, and the additional US tariffs were also not applied in the end, certain business decisions may have stalled as a result of the increased uncertainty that was created. While imports continued to grow in October at 1%, the pace of increase was the slowest in 5 months. China's overall trade with the US kept declining in October, while conversely, it has continued to expand its trade with other partners, including countries of the Association of Southeast Asian Nations and Africa.
On 10th November, China's State Council issued new measures aimed at advancing the development of private investment, including through increased funding for private projects and expanded market access for private firms.
The 13 measures listed in the document include points on expanding the scope of projects private firms can participate in, for instance in the area of urban development and infrastructure, as well as their shareholding ratio. Small and medium-sized enterprises or SMEs would be granted improved access to large government procurement projects, with at least 40% of the total budget of such projects reserved for them. In the same context, purchasing parties will be encouraged to increase the proportion of advanced payments to private firms to more than 30% of the contract amount. This, coupled with provisions on increased financial support for private enterprises, could help those companies better compete against their state-owned counterparts by ensuring liquidity throughout the lifetime of large projects. The State Council also emphasized the need to abolish discrimination and unreasonable access restrictions.
According to data released by China's Statistics Bureau on 9th November, producer price deflation persisted for the 37th month in a row in October, while consumer prices rebounded after 2 consecutive months of decline.
The official producer price index showed a 2.1% year-on-year fall in October. While the overall trend of decline continued, this reading indicated a softest drop since August 2024. It has marked the 4th consecutive month of slowdown in the fall of factory gate prices. Consumer prices rose 0.2% year-on-year. Albeit minimal, this was the strongest uptick recorded all year. A key factor that likely had a positive influence on prices charged to consumers was the 8-day-long national holiday at the beginning of the month that had a warming effect on demand.
On 10th November, the National Development and Reform Commission issued a guideline on boosting new energy consumption, primarily through the development of advanced power grids.
The guidelines outlined 2 sets of objectives. The first set, to be realized by 2030, focused on the establishment of a regulatory framework for new energy consumption and the expansion of new energy power generation. The second set consists of targets for 2035, with the key goal being the development of the power grid so that it can accommodate a high share of new energy.
The European Chamber is conducting a flash survey to better understand the impact of China's export control regime on its members. The results of the survey will be used to help further our advocacy on this topic on behalf of impacted member companies. Invitation has been sent via email from the European Chamber's Secretary General email account, to primary contacts of all member companies that are resident in China.
This survey is anonymous, ensuring your responses are confidential. By participating, you directly influence our advocacy strategy, ensuring it aligns with the real challenges and opportunities faced by our members. Your time and input are highly valued.
Fill out the online questionnaire before the end of the day on 14th November so that we can work together to navigate these complex trade dynamics.
Thanks for listening, and don't forget to tune in again next week.
In the meantime, please find useful links in the episode notes.